Hey everybody, it's Brett from Moonstream. Just wanted to give you guys an update here. What's going on in the markets? Obviously, it's been a pretty chaotic last couple days with the big unwind over the weekend and a nice recovery here. So I want to unpack this for you a little bit. And as always, thanks for Max for letting me hop on here with you guys today. We saw a big sell-off here over the weekend and recovered nicely. Just to open this up a bit, this is of course Bitcoin, and I've had this red line drawn here for about a week now, suspecting that we'd at least come down to this lower edge of the trading channel. Didn't expect that big sell-off. Apparently there was not only $2 billion in liquidations, some are saying as much as $10 billion, the largest liquidation event ever. And in the end, that's good for the rest of us. A flushing out of all of the leverage really lets the spot market come back up and see some true movements. So what I want to call your attention to, though, is this big candle here, and this is from Monday, where we suspected the bleed off would continue from the Saturday, Sunday, coming down to the end of the range, and came back, recovered, came all the way down to around 91,500. And turned into a bullish candle by the end of the day. Remarkable. So technically, we're still in an uptrending channel on Bitcoin here on the daily time frame, waiting for this to either recover. However, we have some warning signs we really have to pay attention to on the weekly chart. So I'll just hop over and look at this a little differently here in a moment. But in this chart, we can see potentially we could be entering a downward trending channel. I really don't want to see that. So basically, in terms of this sideways chop, I've been saying for 6 months or so, this battle for 100K would be an epic battle, mostly because the market makers make most of their money at these mid levels. You know, they're going in liquidating longs and bringing things down to the short side, and then everybody goes short, and then they liquidate the shorts by going back up higher. The more I want to unpack right now. We just did a 2-hour class in our M3 Active Trader and went into that. But at any rate, the potential is here for a downtrending channel. Now we're seeing overlapping channels here, technically still in the broader sense in a slightly uptrending channel here, but on the daily time frame and the weekly time frame, 85K, 86K still in the cards if we were to see a deeper pullback. However, we want to be mindful of that in terms of the steeper angle here, and bear with me, I'm going to go to a different chart because I've got several of these and looking at different angles with that. This is on the weekly time frame, and jumping over to this Coinbase chart, let's just expand this open a little bit. We can see that this 85K level, 84K at the midpoint of this vector candle here, this is where the buyers are lining up. However, the danger is, and I'm going to open this full screen here so you can see it, in terms of the bull market trend lines. Typically in bull markets, you see several different angles of the advance. And so if we were to go back to the prior cycle, we had this angle, this trend line, important by the way, we'll come back to it, where it started back in 2017, 3 touch points. The COVID correction, which is kind of similar to what we saw over the weekend and on Monday. So it could be a great inflection point. But in these bull runs, typically we'll see multiple angles going into the parabolic blow off top. So if we wanted to draw it this way, that would be a pretty good one. And then when we saw that third angle created here, that was that parabolic blow off top. Sorry, TradingView is not really good at letting you overlap indicators here. Let me try this one more time here on that. So we saw this kind of an angle. So once that violated, that was in fact the top. So on that breakdown, even though on the Wyckoff distribution here, or the upthrust after distribution is what this pattern was called, right in this area, which was the higher top. Many are saying the actual top was back here, which I think is valid in the Wyckoff patterns. If you're familiar with those, I won't pull those up here just now. But showing that, this secondary upthrust to kind of fake everyone out, massive bull trap. And also we had a head and shoulders back in here, not to get off topic here. And of course, our bear market indicators telling us that the market was topping back in November of 2021. And I was telling people to get out in December, and really pounding the table to get out in January of 2022. Didn't want to really get into that here. Back to the 3 angles theory here. So 1, 2, and 3 was the last bull market. This baseline, however, it was still one of our angles, right, for the current bull run. So we can extend that out if we want to. Breaking into a new upward angle back in here, And in the terms of where we are now, having this third and final angle, now it's possible we could see a fourth more vertical angle, but the risk with this on the weekly time frame, on the daily time frame, we broke this angle. So right now, seeing a lot of indecision, really need to see this level hold, and by the end of the week, preferably a back up over 100,000 for it to likely have the strength to push up into new all-time highs. Personally, I was selling out of my Bitcoin over the weekend, felt that it would be weak, and so we want to see the breakout. I would like to see a breakout and retest, and then resuming the trend before I'll go back into Bitcoin because this area is such an epic battleground. These green blocks are our order block detectors, where we visualize where the majority of the buy and sell limits orders are on the books. So on the weekly time frame, right in that 84K region is still where a price could go, but we would lose this third angle, and that's the risk here. Typically in a bull market, we don't want to see that third angle violate. So with that in mind, let me jump back over to a daily chart. A lot to cover here today. There were some excellent buying opportunities. Let me undo that here the other day. And in terms of Bitcoin, we saw all this sell pressure here on the daily time frame. Before I jump over and look at Solana and some other altcoins, really seeing heavy sell pressure on these sell blocks. Again, visualizing limit sell orders, the heaviest limit sell orders, which are on the order books. This is Coinbase, but they tend to be generally pretty much the same. So, and on the 1 hour, 4 hour chart, really could see that very clearly with these signals here. And these are part of our crypto mastery signals, where we can visualize those, and also the average true range, which I'll turn off. But we can see back here on Jan 25, heavy sell pressure up in this range, rejected here. Typically, the midpoints will sometimes hold. If it starts rejecting lower in the block, then that's signs of weakness. So really rejecting all through here, getting down below the sell block, bounce back up to it, rejected again, and now we then saw going into the Thursday and the Friday time frame, where we saw multiple overlays of focus and confluence on these sell order blocks. So this is really where the heaviest sell orders are. And typically what happens is the people that had sell orders in here, realizing may not get that price up higher, so they start lowering the bids and asks. And so we see these secondary windows of concentrated sell orders, and that's the way to describe it. If you're able to see the order books and the bid-ask spread and the time and sales, that's what it would show, but we've automated it here and visualized it. So right back here on Thursday, that rejected. People started dropping their bid-asks, and here in this third block, rejected here again on Friday. So that's when I knew we were in trouble, and that price was likely to head lower, and certainly we did throughout the next few days. Going over to a 4 hour chart, can see that a little bit more clearly. And I'll turn off our average true range, which can be used for sort of dynamic stop losses, etc. Don't really want to get into that, but we can see this again rejecting back here on Jan 25 through last week. So this battle for 100K, 105K region has really been an epic one, and I don't think that they're done yet, but essentially we can see rejected here, and then again on Friday, bearish engulfing candle on the 4 hour, and price started dropping throughout. And so we do have some buy orders right in this range around 95K to 96K. So again, we really want to see that push up higher to regain that bullish structure here, ideally. Quick jump over to the IBIT. If you remember 8 months ago or so, and we had talked about this, nobody else is talking about this, but on the IBIT 4 hour chart, of course, the IBIT is the BlackRock ETF, and so when that launched all the way back here in February of last year, so it's been almost a year now. It's actually been a year from when that launched, and so we saw the kind of initial breakout, started noticing that these gaps on the 4 hour chart would refill. And similar to the CME gaps, I won't go into why these things fill. It has something to do with the markets. They close at 4 o'clock. They're closed weekends. The gaps are created when there's an imbalance of price, buyers and sellers, demand and supply. when the markets are closed, so they can open up higher or lower, hence gapping price. But what we have seen is that these have often, if not mostly, refilled. Up until a certain point, they were 100% backfilling, and again, like the CME gaps on the Chicago Exchange and stock markets. But anyway, so you can see when these gaps form, typically price will come up to fill those gaps. And then this gap filled, and it came down to fill that. So we could see and use this as a sort of a magnet for price and predictive tool for future price action. So again, all of these little circles here where there were gaps, and then the gaps filled. So in this case, this gap filled this one. I don't want to get too far down the rabbit hole here. This big gap here dropped and filled that. Now for a while, and right up until the point where I said, hey, these are 100% accurate, and that's when it stopped working, of course. And so there's a number of these in red where these gaps have not filled yet. These could certainly fill later on, maybe in the bear market cycle, but they have started working again. And so this is just one other tool we can use, and I'll just sort of zoom out here, to a little bit more current, but each one of these gaps, this one filled, and all the way through here. Even this big drop on the other day here from, let's say it was here on, it's not giving me the date there, on Friday, and then set, so the weekend was closed, and then it opened up way down here on Monday, but immediately pushed back higher on the 4-hour chart. So this gap has filled, creating a new one right in that range, right in here. So I think we will get a bounce and fill this. Just kind of interesting and curious. Again, these act as magnets. It's not really something that's tradable, but we can use it for our overall bullish bearish thesis and to put a frame around the information. So overall, it's sort of undecided where we go from here. I have a couple of the things to share with you here. An interesting article within TradingView here talking about the outcome of the trade tariffs. The catalyst and the story was the trade tariffs and the tariff war. The reality is oftentimes the markets, when they get overbought, oversold at the key inflection points, the whales, the market makers, they'll use any catalyst as a story or a reason to move price. And the reality was they were really looking to move down, grab some liquidity, and liquidate lots of other traders. That's how they make their money on the market makers. So IBIT and BitGet and all these big exchanges overseas, really there is no regulation. So, whether there's manipulation or not, it is what it is. But so what I'm getting at is the tariffs, not really the cause, or more of the cause effect, a good reason and excuse for them to move markets. But it was a number of things. It was over leveraged. Markets were overbought. We got overbought on these things after the November election inauguration. So some pullback is a good thing for us to push higher. TLDR on this, basically saying the tariffs are what sort of spooked the markets. And scrolling down through this, there's something called the Triffin dilemma, highlights the conflict between a currency serving as a global reserve, the US dollar, generating consistent demand and overvaluation, and the need to run persistent trade deficits to supply enough currency abroad. Don't really need to unpack that, but essentially it puts, while it allows, the status allows the U.S. with a reserve currency to borrow cheaply, it also puts sustained pressure on domestic manufacturing and exports. Also jumping ahead to the Plaza Accord, the 1985 Plaza Accord, this latest move is reminiscent, or they're calling it the Plaza Accord 2. And so we're wanting, with the move, they're suggesting wanting to get rid of the negatives but keep the positives with this move, suggesting that tariffs may have been a negotiating tool, which I was saying the other day, to compel other nations to the table, right? So we're already seeing that with Mexico and Canada coming back to the table to avoid these tariffs, at least in the short term. And then previously devalue the dollar. So, the dollar index way too high right now. If the DXY starts coming down, typically Bitcoin would rally and risk assets would rally again. So that would be good for Bitcoin. So there's two scenarios. Bitcoin wins, fiat loses, they say. But in both of these scenarios, it looks like Bitcoin wins. Scenario one, we see that if Trump succeeds in weakening the dollar while keeping the interest rates low, it'll favor a risk-on environment. And as I said, creating a Plaza Accord number 2, reduce the dollar's overvaluation without boosting interest rates, because we don't want to push interest rates higher. and kind of risk deflation and other factors. But however, as I said, risk appetite among U.S. investors could surge. And so we'll get to a sort of secondary factor on that, which could really push Bitcoin higher. So they're sort of suggesting that in this environment, non-sovereign assets like Bitcoin, free from capital controls and dilution, would likely attract additional inflows. So again, pushing Bitcoin higher potentially there. And I'm just trying to change the color here for some of these. But so meanwhile, other nations grappling with the fallout of a weaker dollar might deploy fiscal monetary stimulus, aka money printing, for their economies, potentially driving even more capital toward alternative assets like Bitcoin. So, this is still scenario one. And saying if Trump can bully his way into the position that there's no asset better than position than Bitcoin, lower rates will also spark the risk appetite of U.S. investors, sending prices high. That's what we saw with the 2021 rally. We saw quantitative easing and risk appetite going higher with liquidity entering the market, as we saw with that, stimulus checks. So I don't want to go too far down the rabbit hole here, but scenario two, prolonged trade war and a massive money printing. So money printing, as I mentioned, the big catalyst for the last bull market. And that was the catalyst was COVID, of course. So they're saying if President Trump secures to secure a broad asset deal with the trade war grinds on, economic global weakness would almost certainly invite extensive monetary stimulus from central banks, aka money printing. And so historically, such large-scale liquidity injections have been bullish for Bitcoin, as investors seek deflationary and decentralized assets insulated from central bank policies. So if both of those are potentially bullish scenarios for Bitcoin. And talking to this here, he says, and if he fails, then we might get a sustained tariff war. But the high conviction view is that the resulting economic weakness would, and this could force the Fed's hand to start monetary easing, right, to lead to monetary printing on a scale larger than we've ever seen. Let me say that again. The high conviction view is the resulting economic weakness. Maybe this is game theory at play, and they know this, and they're going to try to boomerang the economy with a trade war to force the Fed to go in and cut interest rates and start stimulating the economy. So, next level chess there. And so historically, that stimulus, as I mentioned during COVID, has been extraordinarily good for Bitcoin. And so anyway, interesting article there. However, on the bearish side, I have noted this study on USDT, which is Tether dominance. And so historically, we see when along this trend line, if you haven't seen me share this before, you can also look the study up on TradingView. If you Google Brett Fogel TradingView, I've done a couple studies on this. So every time Tether comes down and bounces along this lower trend line here and rallied higher, that's money flowing out of Bitcoin and crypto into stable coins, into Tether. And so if we were, let me just turn off the exponential moving averages here. I've got some new versions, it looks like. Sorry, I got to do that to clean up the chart a bit. What I will add over here, which I already have actually, so I'll just turn it back on the object tree, the total market cap. Okay, so we can see in historically when these move in inverse relationships. So basically back in here when the total or USDT or Tether dominance came back down to this trend line back in Feb of 2021, that was when we were really rallying higher up to the peak in May of 2021, that initial market top, and then seeing Tether at this baseline. But Tether dominance then started to rise, money flowing into stable coins as total market cap came down. And then, of course, we saw the ultimate peak as Tether came back down. So this double zigzag is very telling on where we could be heading here in the next phase. So turning off, and currently right now, total market cap had pushed all the way up here and pulled back a little bit as we're riding along that trend line. It's a bit much to digest here, but it'll make sense in a minute. Turning off the total market cap, what I'm watching for here is this zigzagging along that lower trend line. Again, when this comes down to a low, meaning low levels of Tether, a stable coin, and then bouncing off this trend line, we start to see market tops. So this overlay is exactly that. So it shows we could zigzag around here for a bit longer even. I was a bit concerned right through here because tether dominance had pushed right up to a 50 period, the 50-week exponential moving average. And so we want to see that below there. I have an alert showing it up above 5%. If tether dominance gets above 5%, we are in trouble of seeing something like this happen. More money flowing into tether. I have it labeled as the crypto correction zone. And I think that would be short term, but money flowing out of Bitcoin and alts and everything, and seeing a correction possibly in this March, April, May, June, summertime range. So a lot of uncertainty. Do we see a cycle pump here in February? Some people are saying 120K Bitcoin in the coming week or weeks. And other people are saying we have a cycle low, a daily and weekly cycle low coming end of February, early March. And then, however, I think that'll fool a lot of people to going long. And then we see sort of, again, late, so Q2 into Q3 correction where we'll see this push up, money flowing, we'll see this kind of rally. And then a near-term correction into the summer, April, May, June. And then we start to see this rebound as money flows back out of stable coins, kind of coming out of summer, July, August, September. And then we see a market cycle high kind of around the October range, October, November, potentially could still get to 150K to 200K. 200K on the second bounce, I think, is doable. I've showed that study before. But from there, we really want to watch out for this same kind of thing happening back when this rallied up. This was the bear market right here back in November of 2021, bouncing a second time off this trend line. So seeing that, we could see the same kind of pattern here where we'd see crypto crash and then ultimately up in this range, the bear market, when more money has gone into tether, really come out of the market. So a bit of a long-winded explanation. Hopefully that made sense. Here is that study here. We talked about the potential path for 150K to 200K Bitcoin and the potential reasons. I won't go into that today, but we have 11 factors now with that, including sovereign wealth funds and money printing and Bitcoin reserves that could really accelerate this next phase. And of course, this is the Fibonacci projection, the same one that called the market top from the last cycle. So just redrawing this from the 2017 high to the low down in here and extending that out, it projected the exact high back in here. Again, this was that upthrust after distribution. This was the real cycle high at the 3.618 Fibonacci extension. So using that same strategy here on the Fibonacci's from this as the high down to the low, projects us out at this 150K to 200K levels. And the first Fibonacci projection right at that 100,000 level. So we've been zigzagging around there. No surprise. It was our first Fib target. These blue bars pattern is this from the prior cycle, just extended out for timing and suggesting that we could see this kind of a pattern here, breaking out, pushing up to around that 150K level in the short term, kind of going into around that March, April range. Possibly being range bound a bit longer, but it could happen very quickly, as we can see with this price pattern pushing up to current levels. Similarly, we could see this breakout of these levels push right up to 150K on this within a very short period of time. And so with that, let's say that would be the 2.618 projection, and then that some kind of a pullback here. So if we did push to 150, then reasonably, I'd say we would pull back, see profit taking, see 20-30% correction back down around that 112K level, and to retest this current resistance as support and spend a few weeks in there, and then really starting to rally up for that late end of Q3, sort of Q3 into Q4 rally up to around that 200K level. So that's kind of my base case, what I suggest might be happening. And so we'd have a couple ways to attack that, and certainly profit-taking opportunities if we do see that push to 140, 150 to take profits and then buy back on the pullback. We do see 20-30% corrections during bull markets, and so be ready for that. All right, so what else? Anything else I want to share with you on the monthly time frame? Also signifying we could see a rapid push higher. I did have this green little squiggly sort of showing a pullback and run higher, and that's been on this chart for some time. But however, there is some headwinds ahead. We're rejecting on the monthly RSI here from this trend line and around that 75 level, and retesting the 70 level on this monthly RSI, which has both been support and support here. Minor support for a moment. It's also acted as resistance. So we really need to see this level hold on the monthly RSI and start to go higher, or we risk coming down and maybe down in this range and creating sort of a symmetrical wedge to bounce out of, which could just delay things. Also on the stochastics RSI, on this seeing some lower highs here on this monthly time frame. And while we can zigzag around in here a bit, if I go to a 2-month chart, we can see, you know, typically we don't spend too much time up at these high levels where we are right now, and then without reversing. And again, this 2017 November, December, that was it. That was the end into the bear market back here last cycle. Didn't spend that much time up there at all. This is monthly basis, so it's between kind of this November of 2020 to this is. Sorry, 2-month charts. So into March of 2021, April, that was the market cycle top. Of course, we bounced again, but this was the early signal that it was time to start coming down. So we want to watch this very carefully and give us some head clues on that. The MACD on the monthly time frame, this is why I was calling for one of the reasons I was calling market tops back in the secondary cycle. You know, we see the MACD blue line getting that far above the bars and then peeling down. It's sort of the early signal. It's time to get out. And then as these cross, we get the negative MACD. So on the last cycle, when we got overextended, I was getting a little bit nervous here, saying we should get into cash in November of 2021. You can see that down at the bottom of the screen, and into December. But when this crossed over into, let's see, on the, I need to get back to a monthly time frame. So to get that accurate timing on that. So back in here, when we crossed in January of 2022, I was pounding the table, get out of the markets. My members that listened to me, a few, they were very grateful. They saved over 100,000 in losses. So I want to pay attention. I don't use MACD on shorter time frames, but on the longer term time frames can be very helpful. So when we see that starting to turn down, and certainly when it crosses the red line, that'll be one of the signs to get out of the market if we're not out already, using our other trading timing signals. So going back over to, let's look at a daily chart and suggesting. Let's take a look at Solana. You know, by the way, Bitcoin dominance did spike quite a bit over the weekend. It did pull back down, but we saw Bitcoin dominance levels we haven't seen in some time. Just a reminder, though, during the bull markets, it can be up in the 70% range. It's when it starts pulling back down that we start to see altcoin season, and so we all green on our radar, which is interesting. It's been all red on our radar recently before too, but so Bitcoin dominance looking fairly bullish. Solana dominance had been showing signs of strength, but it has since pulled back here after coming up and rejecting at these levels. Still stronger than ETH dominance, which has been steadily falling, all red on the radar. So and the dollar index has started to kind of pull back from these resistance levels. We'd love to see it back below 107, and going a bit in the weeds here. Let's look at some altcoins and see. So Solana, great trades. We put out some buy alerts during that dip, and suggesting putting out a buy alert there on Sunday to put buy limit orders between 175 and 200. So some of our members got filled at some excellent prices. I was buying down in this range, and of course Solana in a macro upward trend channel. And we love trading out of these buy order blocks because this is where I was able to double my Solana in my IRA, just buying in these green blocks. Again, visualizing where the buy limit orders are. Why not go where the buyers are? They obviously supported price in this range and then selling into resistance. So it's a swing traders market. We have since been in an uptrending market, so I'm buying Solana here, and we'll be looking to sell around 280 in this range. Always keeping some. Solana has a habit of running, keeping a moon bag and holding on to that. I think Solana could hit 500, 750 in this bull run if we do get that kind of alt season we're used to. I will be limiting and focusing on higher probability altcoins. In the DeFi space, Ondo, lots of good news coming out on Ondo. This is one that we like, and so seeing some pullbacks. The Ondo Summit's coming up, and they are a leader in real-world assets. Also, Lido Finance, this DeFi, if we see another... I think DeFi will run again simply because it has revenue models. They are they're making money. Like Aave had done very well with their revenues, so this rapid run-up on Aave, although it's kind of topped out here from down on this range, had a hell of a run all through here because they were just making so much on their DeFi. A bit of a bull flag potentially created in Aave. Kind of need to see what happens on price, although there is quite a bit of sell pressure up here in this $430 range. So limited upside. I would be keeping an eye on Ondo. It certainly could do one of these and then go higher, but hard to say. It's already come up so much that we might see some sector rotation into some other coins. So other than that, not a lot of green in today's markets here. I think we're going to see some more downside, and many altcoins kind of bleeding down. And we are looking at some, targeting some for getting into in these buy zones for long-term accumulation. But that's about all I had to share with you. I think we are probably headed down for a little bit here on Bitcoin. Come back and 95K region. We'll want to see some higher lows kind of for signs of recovery. But still, we have this cloud cover overhead, all of these sell orders. So, honestly, I have an alert set at 108,000. I'm not going to get back into Bitcoin. I sold the last of my Bitcoin right in here. I could tell I was going to sell off, and sure enough, it did. Lost about 10,000 on there. I might buy some for it and plan to sell it back up at this range, but for me to go long term in Bitcoin again, I want to see it close above 108K. Clear all these sell orders. So the sellers are exhausted. That's when the buyers really come back in, and we can see some great things happen again in the markets. So I think it's probably just going to drift down a bit and for another couple weeks, although new information equals new decision, and at any point they could announce the Bitcoin strategic reserve or some other good news. However, I will just point out there is quite a bit of good news right now, and it's not phasing the markets. So let's see, BlackRock to launch Bitcoin ETP in Europe. That's the same equivalent as ETF. They call them ETPs. Prices should be going up. They're not really doing anything. Blockstream opens Tokyo office to drive Bitcoin growth in Asia. It just shows that everything's priced in the markets all the time. And, most likely we'll be watching and waiting for the cycle lows. Of course, Juan Villaverde on the channel has done some great work in cycles, and I believe he's projecting early March for the next cycle low. So that would just sort of see a zigzag around and then kind of break out, let it consolidate and go higher. So that's how we're unpacking what happened over the weekend. Again, it was a variety of factors. Whales were heavily shorting. We had also, we know that the Bitcoin holders between 100 and 1,000 Bitcoin were selling up in this range. Why wouldn't they? Because take some chips off the table. If they had ridden down the last bear market and they had all this Bitcoin, and why wouldn't they take some chips off the table with that 100,000 level? So at any rate, just don't want to need to go into this, but that was one of the other factors. Again, anytime price kind of lingers for too long at highs where the buyers are exhausted, then all it takes is any little catalyst. And in this case, it was somewhat manufactured. They used the tariffs and trade wars FUD, essentially, they being the whales and the market makers, to dump price and go grab a whole bunch of liquidity so that they could come back in and scoop that up and resell it and or hold on to it. So that coupled with creating stop losses, the cycle of stop losses, they're the casino. They can see your hand. They can see where all of the stop losses are, and they know where the liquidations are from all of the margin traders. And their AI, they've got the best AI. The market makers are probably 80% AI these days with 20% humans, maybe not even that. So they ran the projections in the models and said, hey, we could just put a whole bunch of shell pressure over the weekend when ETFs weren't buying, right? And to cause a whole wave of stop losses that would then trigger liquidations, triggering more stop losses, more liquidations. And in the net result, they're saying upwards of $10 billion in liquidations. So it was definitely the biggest liquidation phase that we've ever seen. However, keeping in mind that dip could be, maybe that was our COVID moment, where going back again here to the last, all the way back. Let me just share with you this over did this was the COVID crash. See that candle dropped way back, recovered immediately, and the over time we've seen things like that. We saw the COVID crash, we saw the FTX. This was FTX. Let me just get rid of this arrow. And FTX was right in here. So there we go. So, we are looking for these kinds of moments that really let things accelerate. I'm sorry, was that FTX 2022? Yeah, it was right in that range. I'm pretty sure it was right in there, you guys. And it took us down to the 16.5 lows. Yeah, so that's, and I was projecting those, that would be the bottom all the way back here. So we got lucky on that. So basically, that's what I'm saying is, is this the equivalent of that? It didn't, on a weekly time frame, didn't go down as low. On the daily time frame, though, we did have a quick recovery of that range. And again, we've got to hold this trend line, or maybe the bull markets, we have to start asking, if we lose this trend line, that violation, then we have to start asking ourselves, is the bull market over? But there's way too much bullishness for that to be the case. So I would stay long and strong, and look for profit taking opportunities, and let the markets show signs of strength, and say, all right, now that we're back above all these sell orders, we're back above this recent high, and we've retested that 108K level as support. This is when I think we're really going to start to run. Timing wise, don't pay attention to this, but this is just spaced out so you can visually see it. Anyway, that's all I have for today, everybody, and I hope you guys enjoy the video. Thanks again, Max. And by the way, if anyone is interested in working with me one-on-one, you can reach out and go over to moonstreamcoaching.com and watch a video there. You can book a time with me. I'm working one-on-one with a few clients, and with permission from Max to kind of let you guys know that. You can go over to that Moonstream Coaching, and there's a cool little video there, and check that out. You can book a time with me. Why is this not coming up here? I've spelled it wrong with a fat finger, the letter there. It happens all the time. You can watch this short video, and there's a calendar if you'd like help optimizing your portfolio, and or some one-on-one coaching to become a better trader, really about preservation of capital. Or I do have a way and work with clients on creating optimized portfolios, all the way down to percentages of each coin, to kind of help you with having a game plan going into this next phase of the markets. You don't want to be having 15, 20 coins, because as we saw last weekend, you can't manage those in a big sell-off. I'm going to be really focusing on 5 or 6 coins for this next phase, and then later when we see some alt season potentially, I don't know that I don't think we'll see a broad market alt season. There's too much money is in meme coins, and there's not enough money to support all of the thousands of altcoins, and especially those micro caps. So we're going to be looking for selective altcoins that have business models, either venture backed or profitable. That's why I like DeFi. That's why I like Solana. And or they have large networks and potential for getting customers, because, call me crazy, but I've heard in the past that customers are good for business. So we'll be looking at solid projects that have that ability to earn money and live to fight another day. And that's, I think, where we're going to see the bigger money. The institutions and VCs park their money. That will drive prices. All right, everybody, let me know down below. Make sure to like the video and subscribe if you'd like to see more of these. And we'll talk to you soon. All right, cheers, everyone. Bye-bye.